Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk!
Good morning, a warm welcome to my podcast Money Talk for Tuesday the 12th of September. You can find this programme on Substack, Apple Podcasts, Google Podcasts, Spotify, Facebook, Instagram and Threads. Just search for Peter Lewis's Money Talk. On X, formerly known as Twitter, the programme can be found at Money Talk R3. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's business and finance headlines, President Biden ended a two-day visit to Hanoi Monday with the signing of a comprehensive strategic partnership with Vietnam. The partnership with Washington is the highest level of diplomatic ties extended by Vietnam. The White House National Security Advisor Jake Sullivan said it reflects the leading role that Vietnam will play in our growing network of partnerships in the Indo-Pacific region as we look to the future. Several billions of dollars in business deals and partnerships were agreed during the two-day visit. Credit in China expanded more than expected in August as lenders boosted loans and the government accelerated the sale of bonds. Aggregate financing to the economy, which is a broad measure of new credit, was triple the record low in July, boosted by growth in new loans and lending through shadow banking. Bloomberg News reported Monday that HSBC is set to raise mortgage rates for borrowers in Hong Kong, adding pressure on the city's slumping property market. The lender is raising the cap on home loans linked to the Hong Kong interbank offered rate by 50 basis points, pushing rates on new loans to 4.125% from 3.625% effective September the 18th. Banks last raised the cap in 2022 by 25 basis points. The European Commission Monday lowered its growth forecast for the EU economy in 2023 and 2024 and raised its predictions for inflation just days before the European Central Bank meets on Thursday to consider its next move on interest rates. The European economy is forecast to grow by just 0.8% in 2023 and 1.4% in 2024. The Commission expects inflation to remain slightly higher than anticipated in 2024 at 3.2%. On today's Money Talk, we're joined by Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, Christopher Lee, Partner at Farron, Augustine and Alexander Investments, and our US Economics Correspondent, writer and broadcaster Barry Wood. If you want to get in touch, please go to my website, peterlewismoneytalk.substack.com. That's where you'll also find my daily newsletter with a lot more business and finance news from across Asia.
Peter Lewis's Money Talk.
On Wall Street, stocks rose ahead of key US inflation data later this week as markets watch for signs that inflation is cooling towards the Fed's 2% target. The S&P 500 gained 0.7% to 4,488. The Dow rose 87 points, or 1/3% to 34,664, aided by a 1.2% rise in Walt Disney. Tech shares were the outperformers, helping the Nasdaq to rally by 1.1% to 13,920. Bullish sentiment Monday was helped by a report in the Wall Street Journal saying there was a consensus amongst the Federal Reserve not to raise rates at next week's meeting. The report also cited a policy shift in which members are seeing less urgency to add another rate hike later this year as inflation data has been improving. The US dollar fell by the most in 2 months after China and Japan signalled a willingness to take steps that will bolster their currencies, triggering a sharp jump in the yuan and the yen. The US dollar index fell 0.5% to 104.55 following 8 straight weeks of gains up until Friday. The Japanese yen strengthened as much as 1.1% to 146.12 per dollar on Monday, after Bank of Japan Governor Kazuo Ueda said in an interview it's possible the central bank will have enough information and data by the year end to judge if wages will continue to rise. He said the bank will seek a quiet exit from its ultra-dovish monetary policy. China escalated its defence of the yuan by delivering a strong verbal warning to speculators and fixing the daily reference rate much higher than expected. The offshore yuan appreciated past 7.3 renminbi per dollar Monday, rebounding sharply from the lowest level since offshore trading was introduced in 2010, as China's central bank set a daily midpoint rates with the strongest bias on record. Offshore yuan surged 0.8% to 7.3014 renminbi. The onshore yuan, which hit a 16-year low last week, rebounded 0.8% to 7.2847. The PBOC said it will take action to correct one-sided moves in the markets whenever it's needed, and they're confident in keeping the yuan at a reasonably stable level. And the central bank added we will resolutely correct one-sided speculation. In Hong Kong, the Hang Seng Index lost 106 points, or 0.6%, trading at 18,096 at the close. The index was dragged lower by steep declines in property stocks. The Hang Seng Properties Index, a gauge of Hong Kong's top developers, fell 3.3% on reports that HSBC was planning to increase mortgage rates by 50 basis points. The tech index dropped 0.2%. It was impacted by shares of Alibaba, which fell 3% after the company said in a surprise move that outgoing CEO Daniel Zhang will step down as chairman and CEO of its cloud business. And the Hang Seng expected to open about 0.2% firmer this morning at around 18,140 according to futures markets. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Let's welcome our Tuesday morning guests. I'm joined by, first of all, Mark Michelson, who is chairman of the Asia CEO Forum at IMA Asia. Morning, Mark.
Good morning, Peter.
And also with us, Christopher Lee, senior partner at Farron, Augustine and Alexander Investments. Morning to you, Chris.
Good morning, Peter.
And
Hello.
as always, on a Tuesday morning, Monday evening in Washington, D.C., we find our US economics correspondent, writer and broadcaster, Barry Wood. Morning to you, Barry.
Good morning, Peter.
Now, the G20 over the weekend, India hosted world leaders at the G20 summit in New Delhi. Attendees included US President Joe Biden and French President Emmanuel Macron, but not Xi Jinping or Russian President Vladimir Putin, who both skipped the forum of leading nations. Host nation India pulled off a huge surprise by announcing that agreement on a final communique had been reached, despite the geopolitical frictions ahead of the gathering. Mark, I suppose, as G20 meetings go, this one was pretty good, wasn't it, in terms of at least agreeing some concrete outcomes on things like expanding the World Bank and the IMF to provide relief to poorer nations. It also agreed on a few other substantial issues, so maybe a diplomatic coup for India here.
Yeah, well, definitely a coup for India and a boost to Prime Minister Modi's election campaign as well. And so it's better than expected. You know, compared when G20 began, or around the time of the global financial crisis, it really did have a major role to play. And the first 2 or 3 meetings were pretty important. Since then, it's sort of ebbed and flowed. This helps a little bit. And of course, there's some promising aspects of it, but also there's a lack of some concrete commitments as well on things like climate change and biofuels and other areas.
They never seem to be able to agree on what steps to take on climate change, do they? They always agree that something needs to be done, but
it's a consensus. And to reach, the Ukraine statement was a good example of that consensus. That it was criticized by some as not being strong enough, but it was probably the best they could get. And again, the U.S. is trying to develop its relationship with India, so the U.S. was going to support that as well as a compromise. Let's put it this way. So yeah, definitely positive, and some interesting developments. I'm sure we're going to talk in detail about them, especially in the infrastructure area for the Middle East and in Europe to some extent.
Yeah. Chris, what's this telling us about US-India relations? They seem to be becoming more strategic, don't they, and more important to really both sides.
Well, U.S.-India has always been pretty strategic, and, just look at the IT industry, right? So there has always been a very close working relationship. I think, agree with you, Peter, that this is the G20 meeting. So a lot is really about the top 20 countries economically speaking. So I would not be disappointed that Xi Jinping did not attend, because he sent his number 2, Li Qiang, who actually has an MBA degree, right? So from Hong Kong Poly U. So we're having the right people at the right meetings, talking about the right economic issues. So I also share an element of optimism with Mark, and I hope this is a good trajectory that we're seeing going into the end of the year.
Barry, you've attended
Peter-
some of these
Peter-
summits before, haven't you? Sorry, Mark.
I just might, and I'll let Barry talk in a second. Just might mention though that there was very little coverage of the premier's participation in the meeting, and in fact, I did an interview with the TV network yesterday. They didn't even 10 minutes. They didn't even ask me about China, which is sort of interesting.
And
Anyway.
Premier Li Jiang did meet with President Biden, which was also unreported, really,
Yeah.
wasn't it? They had a meeting on the sidelines of the conference, but we don't really know what they discussed.
No, that's exactly right.
Like so many things that happen in your part of the world.
Yes.
Look,
That's
I have a very different take than my interlocutors here. I think it was not a failure, but certainly not much of a success. I think it was dominated by the absence of China. We knew that Putin and Russia would not come because he would, since India, I think, is a signatory to that tribunal, would have to be arrested. So he was never in line to attend, but Xi was. And I think his absence really was a big void that the Indians and Americans tried to fill. And I think it's very clear that the Americans are trying to catch up with the Chinese in terms of the Belt and Road with their own alternative. They're talking about the World Bank and the IMF, not to give them more representation, but to at least do more lending. And I think that this represents a downgrading of the G20 by China. After all, this is, as the declaration even says, 29 pages, by the way, and at 37 if you want to include the annexes. That 29-page declaration says near the top that the G20 is the world's premier organization for economic cooperation. Janet Yellen, a Treasury Secretary, never attending summits. So, I mean, I would think the others in this club might be looking with raised eyebrows as to why she was there. But she says the G20 is a forum for solving global problems. That's really quite different. So I think the G20 is in transition. They've agreed to let another African in, the chairman of the African Union. But I think it's a work in progress and not necessarily positive.
Chris, do you agree that it's downgraded by the fact that President Xi Jinping wasn't there?
Well, it certainly wasn't good, and I think Li Jiang does have the right resume, Barry, to be at this G20 meeting. I mean, as I said, he's the only Chinese leader that I know who has an MBA degree. I mean, everybody else is an engineer, so he has that preparation. Again, he was educated here in Hong Kong at PolyU, and so it is the G20 meeting more focused on economic issues. And so this is probably a good beginning that some, I think, senior level Chinese leaders would potentially attend the November APEC meeting in San Francisco. So I think, I am a bit sort of like Mark Michelson, that I'm more about the CEO summits, more of a business to business type discussions. While I agree, I think, with many of you that there's centralization of political power in Beijing, but I also see a lot of economic decentralization. So the private sector, as Peter had mentioned, has produced a lot of jobs, and also the growth is mostly coming from the private sector. You look at the stock market capitalization, most of the bigger cap companies now are from the private sectors. So having, I think, this meeting attended by Li Jiang, who is the number 2 from China, is a good start. It's a good, I think, a beginning of a hopefully.
I'm sure you've got a valid point there.
Yeah.
Here's an economic specialist, so that's a plus. But let's not forget, above all, this is a club. And a club is the heads of state and government. So the club was not represented by one of its principal members' leader. So I think you have to look askance at that. Secondly, look at the format of this. The Indians had invited, as is the habit of leaders in these rotating host summits, 9 countries, and they sat around. They'd have to shout across the way if it weren't for screens and microphones. 30-odd members, participants in the meeting. Even the group photo was around the grave of Mahatma Gandhi, so you couldn't really identify who was in the photo. That's unprecedented that they didn't stand for a group photo. So, I don't want to sound cynical, I think the G20 is a very positive creation, but I'm not sure that this pushes that process forward.
Mark, on a couple of specific issues, what do you make of this infrastructure plan to connect India, Indian ports by railway through Middle East countries and then onto Europe, and hopefully cutting down on shipment times, on costs? How significant is that?
Well, I think we have to see how it's implemented. Clearly, the Belt and Road was in mind when this was created. It's very interesting that many of the signatories of this agreement are also the members of BRICS. So there's a very interesting connection. This is part of what's called the Partnership for Global Infrastructure and Investment, which the U.S. has. And I think it shows, again, growing cooperation, strategic cooperation between the U.S. and India, but interesting to involve many of the countries in the Gulf and even Israel as part of this agreement. So I think that's a positive development. Is it dramatic? Probably not. But at the same time, it's at least an alternative or another option for countries who are in need of infrastructure and other assistance to get it, and they need it. So I don't think it's exactly a rival to the Belt and Road, but it's an addition to the Belt and Road, I think.
Oh, I think it clearly is a rival. I think we're seeing evidence here that the Americans, and to a lesser extent the Europeans, are fighting back. They're not going to let China dominate the development agenda in the world, and I think that's clear evidence. What you say, Mark, is true. I mean, this is a positive development.
Okay.
Yeah, well, I think it's meant to be a rival to the Belt and Road. I'm just not sure practically it's going to be. I don't think it probably will be. Frankly, Belt and Road has enough problems, as we well know, and they become very clear, especially in debt and in many of the projects that turned out to be not successful at all. In fact, probably counterproductive.
Chris, the other thing that was agreed was on debt relief, wasn't it? Talking about reforming and expanding the roles of the World Bank and the International Monetary Fund so that they can spend more on global priorities. The US is talking about expanding the World Bank's capacity by $25 billion. That could rise to $100 billion if other countries also participate. And the idea is to spend more on things like climate change, on fighting pandemics. How significant is this? Because third world debt is a big issue, isn't it? The World Bank estimates that the poorest nations have annual debt servicing costs of over $60 billion to bilateral creditors. 2/3 of that is owed to China.
Yeah, so I'm happy to see that, and that's a positive development as well, just more relief. And extending credit is better than just giving handouts for free. I think we had this debate a little bit earlier. I think, this is more disciplined way of helping the poor countries. Just like if your friend were in financial distress, instead of just giving him free money, I think I would prefer to give my friend just a free interest loan, but he has to pay back, right? So this is more responsible way of helping your friend. And also, I believe longer term, there will be more benefits from having that loan pay back instead of just giving out the free handouts that we talked about earlier. And as you see, I mean, this is also quite the approach that the Beijing government is adopting in mainland China, instead of just giving away free money like what Hong Kong government has done and some U.S. I think politicians have been promoting. The Chinese government has been extending credit, really, right? So giving out more loans and also easing the credits and trying to give more borrowing. So I think this is in line with the globally responsible way of helping poor nations.
Okay.
But again, it's part of the rivalry that Barry cited as well, because China is the major lender to a lot of these countries, as you mentioned before, and this is again an alternative and maybe one that they hope that they will take up, and also part of the Voice of the Global South initiative that India is trying to grab this crown, and felt that the G20 was made progress toward this objective.
Indeed.
Barry, this is the global south is becoming a big issue, isn't it? India and China vying with each other to be seen as leaders of the so-called global south. That's another aspect of this summit, isn't it?
Well, it is, but as our friend Stuart Allcraft likes to observe, Russia is not in the global south. If you look at a globe, they're way in the north. China is not in the global south. India is not in the global south. So I think the term is, I rather like developing countries. What's wrong with that? That was the old term. But they all want to be the leader of the global south, certainly India and China. And that's really what I saw in just reading, particularly the Indian media, on this New Delhi summit. It was clearly no mention of China, really. It's just that, India is the champion of the global south. Yeah. India is rising. Here's a huge extravaganza. India is coming, and rising.
That's the point. And I think it's a very good point that Barry made. I was also wondering if the global south included Texas and Florida, but
or Louisiana. For that.
Yeah. Well, we won't go into this.
They're developing fast.
Yeah, this rivalry is important, and I think it also the big news was BRICS, which we've talked about before. But here, the two major countries are China and India, and they clearly are not only rivals; they don't get along very well. And I think this meeting probably underlined that.
Let me ask the three of you about another country that's also growing in significance. That's Vietnam. President Biden's ended a 2-day visit to Hanoi with the signing of a comprehensive strategic partnership with Vietnam. Mark, you and I are both old enough to remember the times, I think, in the 1970s and the 1980s when the US and Vietnam weren't even talking to each other. The US had sanctions on Vietnam for quite a long time, didn't it? This is quite a significant change, really.
It's pretty dramatic, and I've spent a lot of time in Vietnam over the past 20 years. In fact, helped organize maybe the first Independence Day, 4th of July party in Hanoi since maybe 1954, even before in the early 90s, before relations were formalized. So this, symbolically, this is a big step forward, and he brought along companies too. And there were deals, and especially Boeing sold some planes, and some of the tech companies were there. What they didn't mention, surprisingly, was Intel, which in 2006 put $1 billion in Vietnam, way ahead of everyone else, thinking that this was going to be the place that was going to develop, and looked at it as with young population, potentially skilled labor. Potentially well-educated. Many of them have been educated abroad and come back to Vietnam and so on. And that bet turned out to be pretty successful. And I think we're following this, and this is now trending onto the political side as well. So, admittedly, it's symbolic. They also have a similar relationship with China and Russia, as we well know officially. But at the same time, this is a step forward, I think, for Vietnam and for the U.S. and its relationship with Vietnam, especially since the president was there.
Are they doing this as a counterbalance to their relations with China?
I think this is this is very positive, because Vietnam, as you said, 50 years ago was the U.S. enemy, right? But then, again, it is a single-party state. It's still a socialist country. But I don't think this is a political calculus here. I think this is, again, going back to economics discussion that we have been talking about since we got online. I mean, I look at the World Bank figures, and GDP per capita in Vietnam is about $4,000 in 2022. And China is now up to like $12,000 now, GDP per capita. So if there's a source where U.S. manufacturing companies can source a better and cheaper labor, right? Vietnam is definitely a key consideration. So labor costs are going up in China. And so if you can find a place where 30% of your costs can be taken care of, right? That's a good economic discussion. I think also a good economic decision. So it's not just political. I think people can forget about the political nightmare since 50 years ago. I think there's a very strong economic argument why U.S. companies should partner with Vietnam.
There are capacity problems in Vietnam. There are labor problems. There's corruption. There are other situations that have made some companies that come to Vietnam, but also maybe not expand as much as they wanted. But at the same time, it does have great promise. In relation with the U.S., it's interesting. President Biden went to visit Memorial to John McCain. There's always been a tribute to John McCain in Hanoi at the old Hanoi Hilton, the old prison where he was incarcerated for all those years. It's an interesting relationship. So yes, hostility. Yes, they fought each other, but that moderated very quickly among top Vietnamese officials, even well before this, which I think surprised a lot of us.
Mm-hmm.
Barry, Vietnam is going to become a key player in things like semiconductor supplies, global supply chains for the electronics sector for US companies, isn't it? So the significance of Vietnam, it can't be underestimated.
Well, that's true, Peter. But at the same time, there's not going to be big fabrication plants for semiconductors in Vietnam. It just doesn't have the infrastructure. It doesn't have the population base. It's not going to replace China. This is what the Americans rather curiously call friend-shoring. I mean, the hostility that the Vietnamese have for the Chinese is palpable. You talk to these American tourists who expect to find hostility, and they say, my God, they've got signs all over Hanoi and Ho Chi Minh City saying, welcome Americans. So, yeah, it's a good thing. But let's not forget, Joe Biden was there for less than 24 hours. So, it's something. It's an attempt to, diversify supply chains. And I think it is, as both Mark and Chris have said, it's very significant.
Mm.
Symbolically, I agree with Barry. Symbolically, it's important, but think of the iPhone. Yes, some of the manufacturing has been farmed out to other places, to India, Vietnam, to some extent elsewhere. But is it going to stop? Is the majority stop going to be made in China? I don't think so. I think China is still going to be the center unless something really, really blows up.
That part I would agree, because the scale issue, again, Vietnam is a country with only 90-some million people, right? So China is still with 1.4 billion people, with most of the Apple iPhone manufacturing facilities, physically and also professionally speaking. So it's not going to replace, anytime soon.
Right.
Economically, Vietnam, I mean, it's done well, hasn't it? Last year, it grew 8%, its GDP, although it has slowed this year because it's also being impacted by the slowdown in China. So its exports are also falling as well. But nevertheless, Mark, economically, Vietnam is sort of leading the world, isn't it, in terms of GDP growth, or one of the best performing nations anyway, globally.
Yeah, it's been doing very well. We used to look at the ASEAN 5 in terms of economically. Now we look at the ASEAN 6, and that includes Vietnam, which is in some ways outperforming some of its rivals in ASEAN, although, as we pointed out, there are some challenges there and weaknesses, and we'll see going forward. But of course, many of their other competitors in ASEAN, which is a very competitive group, although it is an association. Most of the members compete against each other, especially those that have relatively advanced economies. That's going to be interesting as we move on. But certainly Vietnam has outperformed in the past few years.
Okay, let's switch our attention to the markets. A big feature recently has been the strong dollar, although China and Japan have started to push back against that. Last week, the dollar surged to its best week since February. The US dollar index has risen for 8 straight weeks. That's its longest streak of weekly gains since February 2015, although yesterday the US dollar fell by the most in 2 months after China and Japan signalled a willingness to take steps that are going to bolster their currencies, triggering a sharp jump in the yuan and the yen. Chris, first of all, I'm always a little bit surprised about this. I would have thought Japan and China should be delighted about their weak currencies. I mean, look what it's done, particularly in Japan, to the economy. It's helped boost the economy and the markets.
Yeah, so I go back to that political versus economic, issues, right? I mean, at 146 yen to the dollar, and now renminbi is almost 7.35 to the dollar now. I mean, yes, I know politically speaking, I mean, I might be a little bit worried. But again, as a businessman, I am not worried at all. I think this actually helps more Chinese exports and also Japanese exports, right, to the United States. And so the average Americans can enjoy cheaper goods and also higher quality goods. And again, the business-to-business discussion is very important here. While I know the strength of the currency represents the strength of a nation in some aspect, but economically speaking, I mean, the domestic economy in China is struggling, as we all know. So a lot of, I think, corporations need to rely on the good old exports, right, to really boost the 2024 performance. So I'm not worried at all about the currency depreciation of Chinese yuan. I think it might be a good thing, even for Americans.
Yep, that's what I would have thought. What do you think,
Yep.
Mark? I mean, these weak currencies are exactly what, like China, if you want to fight deflation, then this is the way to do it. Let your currency slide.
Yeah, but the Chinese are worried about the implications too. They don't want it. They don't want it continuing weak. They don't. They want to find a comfortable middle ground if they can, and they feel they've lost control of the currency at this point, and it's going to affect capital outflows and other issues, and is it going to be harder to manage? And I think that's one of the worries. Of course, it does. Maybe makes them more competitive from an export standpoint. A lot of people would welcome this, but I think the Chinese government would like to feel like they can manage it a little bit more successfully than they've been able to do recently.
Barry, I'm always amused when these slides are called speculative attacks by the central banks of Japan and China. They're not speculative at all, are they? There's a very good reason for it, and that's because US yields are way, way higher than Japanese and Chinese yields. So this is exactly what you would expect to happen.
Yes, I think the answer to your question about the dollar and dollar weakness or strength is going to continue for the reason you just stated. I mean, U.S. rates are high. I don't think they're going to go higher. Some would say that. Perhaps Chris has a different view. But high rates are here to stay in the States, at least for the next 6 to 12 months. The United States economy is outperforming Europe. So the euro is going to remain relatively weak against the dollar. And I think, as Chris has rather persuasively said, both China and Japan are happy with the current exchange rate. I know, Mark, you've got a different view, but so I think the dollar is going to stay strong despite all of our fundamental balance of payments problems.
There was an interesting article over the weekend in the Wall Street Journal by Nick Simmerus, who's known as the Fed Whisperer because of his contacts within the Fed. He's basically saying that there's now consensus that rates will be left on hold next week when the Fed meets, but also there's a shift now in Fed policy thinking that maybe now the fight is not so much anymore against rising inflation. It's to make sure that the economy doesn't fall into recession.
Well, I'm sure there is that discussion, but it seems to me that we've got a transformative change in the United States economy. For the first time in at least 2 years, probably much longer, 20 years, I misspoke. I meant in 20 years, you've got a positive real interest rate. That means we're going to become a nation of savers again because the inflation rate has been above the rate of interest for a very long time. And now with the inflation rate down 2/3 to just over 3 and interest rates on home mortgages up to 7, that means there's an incentive for savers. This is an important transformative change. And I think the Fed will come under a lot of pressure from Congress and others to cut rates, but I hope they stand firm.
You could almost argue that rates aren't yet high enough. If you've got economic growth at 3%, which is where it's looking like it may come out this quarter, plus inflation at 3%, that's 6%. Fed rates at 5.25%, maybe still not high enough.
Well, that could be, but at the same time, I mean, this is like putting more twigs on the camel's back. I mean, at what point do you really crush the housing market? What point do you crush the credit card and the auto loan market? And I think that we're just beginning to see the effects of the rate hikes that have gone on for 16 months.
Do you think, Chris, that the PBOC and the Bank of Japan can really stop their currencies from weakening? Is this a forsaken battle?
It's very, very hard. I mean, the currency markets, as we know, is always bigger than the individual banks or central government, and it's really the markets that will determine, right, the exchange rate, right? So in global markets, you've worked in global markets for many years, Peter. We know that we cannot control the global markets. This is basically a free form of currency exchange because the yen is freely tradable, and I know the Chinese renminbi is not yet, so they have a bit more control on renminbi, but the yen is freely tradable.
And it's at the moment it's significant that it's a lot of talk but not much action. I mean, the Bank of Japan is talking about intervening, but it hasn't done so so far this year, has it? The PBOC likewise giving out warnings to speculators, trying to adjust things through the fixing, but also at the same time it's not going in and really doing an awful lot.
Not much. And again, I mean, I echo what Barry said about the high US dollar interest rates. I think that's going to keep the dollar very, very strong in the foreseeable future, especially as I think 2024 is going to be an election year. So I do think that the dollar will remain very, very prominent.
Mark, let me ask you about the Chinese economy. We've had some data, quite a lot of data over the last few days. We had credit data, which was better than expected. Credit in China expanded more than expected in August as lenders boosted loans and the government accelerated the sale of bonds. We also had inflation data, which showed deflationary pressures easing. Are you getting any sense at all that maybe the Chinese economy has turned a corner now?
There's a feeling that maybe the worst is over, at least for now, but there are always surprises. A part of the worry continues to be, we've talked before about economic long COVID, that the effect on confidence in Chinese consumers. Barry was talking about saving. You may remember that the U.S. and China agreed a few years ago that China would try to save less and the U.S. would try to save more.
Yes.
Well, maybe the U.S. is starting to do that, but China's not saving less. and that's an indicator, I think, of what's happening. So we're forecasting that 2024 will be better for China, not spectacularly better, but certainly better for China as they start to deal with some of the issues. But that's going to be affected by factors outside of their control as well. So it looks immediately promising, but I think no guarantees at this point.
Are these steps then that the Chinese government has announced to try and stabilise the housing market, cut mortgage rates, cut down payments, are those starting to have an effect? Is that one of the reasons why we're seeing the data improving? Is it down to these measures?
I should let some of the others comment on this, but some of our companies heavily involved with property are not convinced yet. I mean, it probably has helped the numbers, but they're not convinced that they're strong enough and they've gone far enough, and maybe that's very hard to do anyway, to really improve the situation. And those that are in that market or are dependent on it for their businesses are not feeling very very confident these days.
I have not seen the recovery of local property markets yet in China. Right, it's good that they have reduced the down payment amount, and also they have relaxed a lot of the rules. But again, I mean, the domestic consumption has yet to return. I mean, a lot of money is still not being spent, and it goes back to the point that I made earlier, Peter. I think a lot of the Chinese corporates ought to focus on the export sector, right? So historically, that export sector has done very well for many corporations and their earnings. And at the moment, to take advantage of the weakening renminbi, they should be able to boost their sales and also earnings through more exports.
Are these measures then the government stimulus measures? I use the term stimulus fairly loosely because they've been pretty piecemeal, haven't they? But nevertheless, are they starting to have an effect?
I haven't seen much. I know the stock market has not reacted yet, to lower sort of like stamp duties and also all that stuff. And even Hong Kong is now struggling to boost the transactional volume, right, on Hong Kong market by proposing, some measures similar to what we have seen in China. But I think fundamentally we have to improve the corporate earnings by selling more products overseas. That would fundamentally, I think, boost the performance of both financial markets and the local economy.
Barry, Janet Yellen's been speaking about the Chinese economy while she was at the G20 summit. She seems fairly relaxed about it, noting the slowdown, but basically saying the Chinese government and the PBOC has the tools to deal with it, and it's not really going to have an effect on the USA, although she said it will have a big effect on East Asian countries.
Yeah, I think Ms. Yellen, first of all, has done an outstanding job as Treasury Secretary, just as Gina Raimondo has done a great job as Commerce Secretary. But I think the Americans are very relaxed about what's happening in China. I think that if you look at the statements that are made by these officials, particularly Janet Yellen, they say China's got room to expand. They've got room to boost credit. So they're not dictating or prescribing what the Chinese should do, but I think the discussions must include all of that. I think that what we have to look for is some Chinese officials coming to Washington and some signals that the Chinese are not overly anxious and angry at the Americans, because I sense that they must be.
I mean, it's been very one-way traffic so far, hasn't it? Lots of American officials going over to Beijing, but no sign of anyone going back, although there are sort of rumours that maybe Antony Blinken's going to meet with Wang Yi in Washington sometime soon.
And you look at the state media is really strong in stridently accusing the Americans of interfering in lots of different areas, whether it's human rights, Taiwan, South China Sea, etc. And they can probably look at what happened in New Delhi and also the president being in Vietnam and say these are not friendly gestures.
Mark, final thoughts from you. I mean, what more can the Chinese government do? What would you like to see them do, given that Janet Yellen says they have plenty of tools available to them? What should they go and use?
Well, I think they'll do that. They'll, of course, make they'll take measures to try to bolster the property market. We don't know how successfully, as Chris mentioned, if not lowering interest rates, at least making some sort of moves in that direction. But I think they're going to be very careful, continue to be careful, because they see implications of making those moves as well economically. So I think they're going to tread very carefully. Is that going to come back to bite them? I mean, it could, but at the same time, they have a lot of levers that they can push, as Janet Yellen said. And they've got some pretty good people that are managing the economy. So I sort of have similar confidence that Janet Yellen does in the Chinese economy going forward. Not overconfident, but at the same time thinking that eventually they're going to be able to manage their way through some of these issues.
Chris, in 1 minute, what would you like to see the government do?
I like to see the government sending more people to San Francisco in November. It is the CEO meetings, APEC CEO meetings. I mean, to Barry's point, Secretary Yellen had gone to China, Secretary Raimondo had gone to China, Blinken had gone to China. So I know there will be many Chinese CEOs going to San Francisco, and I think there will be also some party leaders from Beijing heading to San Francisco as well. So that should be a good thing if they listen to Barry.
Okay. I'm sure they are. I'm sure they're hanging on his every word.
Well,
thank you all very much there. You heard Christopher Lee, who's Senior Partner at Farron, Augustine and Alexander Investments, Mark Michelson, who's Chairman of the Asia CEO Forum at IMA Asia, and our US Economics Correspondent over in Washington, DC, Barry Wood. Thank you for listening this morning. Just a reminder once again to take a look at my website, peterlewismoneytalk.substack.com, where you'll find my daily newsletter, and that has a lot more business and finance news to go with this show. I'll be back tomorrow when my guest will be Hao Hong, Chief Economist at Grow Investment Group, and from the USA, Tony Nash, founder of Complete Intelligence. And with a view from Japan is Tokyo-based journalist and author William Pesek. Please catch me tomorrow.
Money Talk